Assalamu alaikum. Hello and welcome to Gurukul Online Learning Network. I'm instructor Sheikh Mahadi. Today we're going to study finance and banking. Today is chapter 4, financial statement and analysis. So back in the previous class, as I said, we will take some important elements from the math and then we'll put it into other maths. So we did a financial statement analysis and we told that few of the elements will be taken into the other parts of the maths. So let's begin. There are various kinds of ratio management. These are called ratio management maths. So let's begin with liquidity ratio. What's liquidity ratio? Liquidity means liquid money. Liquid money is money on hand that is used for the term liquid. Anyway, so liquidity ratio has two types, which is the current ratio and the acid test ratio. So current test ratio, let's take a look at the formula. Current ratio is current assets minus current liabilities. Current assets are the assets which we have at our hand, and cash is a current asset. Current liabilities means a loan, a short-term loan is a current liability. Like if taken a loan from someone else or some institution for a very short amount of period, that's called a current liability. So current assets is 3,620,000. So divide assets by liabilities, we get a whopping 1.97% of current ratios. Secondly, the acid test ratio. Acid test ratio's formula is current asset minus inventory divided by current liability. So it is similar to the current ratios. Only we have to just minus or subtract the inventory from the current assets. So let's take a look. Acid test ratio is current asset minus inventory divided by current liability. So current asset is same as this one, with just inventory is 287,000. So 1,223,000 minus 287,000 minus that will be subtracted from this one and divided by 620,000, which will bring us to 1.51%. 1.51% of the acid test ratio. So secondly, we have asset management ratio. This is called asset management. The before one was liquidity. It was all with money, capital or liquid formation of money, liquid forms of money, which was acid test and current test. So now we are going to the solid objects, solid materials, which are the asset management ratio. So there are three formulas. Asset management ratio. So actually there are four. So we begin with three. Asset management ratios are: number one, inventory turnover ratio. What is the formula of inventory turnover ratio? Cost of goods sold. Cost of goods sold divided by inventory. Almost same as this, but not as like those. So inventory, cost of goods sold divided by inventory. What is cost of goods sold? Cost of goods sold is the cost that we had to maintain for selling that particular good. Suppose our good is chips, and the costs were the raw material cost for bringing the potatoes, the packaging cost, the factory cost, the salaries, the wages. These are the cost, the transportation, the raw materials, the advertisements. These are the costs of goods sold that we had the cost to sell that good, that sellable good. So those are the cost of goods sold. And inventory is just basic inventory, the stocks. So cost of goods sold, 288,000 divided by 287,000, it brings us to 7.2%. This is the basic formula of inventory turnover ratio. So average collection period, or ACP. Some would said ACP. Accounts receivable into 360. So 360 basically means 1 year. Sometimes it is taken 365 or 360. It is more valuable to take 360 more than 365. So accounts receivable into 360 divided by annual sales. Annual sales is the sales we have at the end of each year. It's called the annual sales. So let's take a look at the numbers. 503,000. 503,000. That will be into 360, which is 1 year. 360 1 year divided by the annual sales. The sales we had at the end of the year is 4,000. So all that calculation brings us down to a 59 days. 59 days of average collection period is 59. So secondly, see, average payment period. This was collection and this is payment. Collection is cash inflow, payment is cash outflow. So average payment period. Accounts payable into 360. Accounts payable into 360 accounts payable into 360 divided by account purchase. What is accounts payable? Accounts payable means we are liable to others. We have creditors to ourselves. That means we will be giving money to them into 360. So accounts payable into 360 divided by annual purchase. Annual purchase is all the things that we purchase at the end of the year, or the amount of the purchase that we collected or we had calculated at the end of the year is known as annual purchase. So let's take a look at the numbers. 380,000 into 360 divided by 2,088,000. 880,000, 2,808,000. So calculate all of those and we'll get a whopping 94 days. 94 days of average payment period we will have for that year. That is called the average payment period. So let's take a look at the fourth formula of asset management. The fourth formula, as I said, asset management ratio had 4 formulas. The fourth formula is account receivable turnover ratio. It's receivable turnover ratio, okay? So D. Accounts receivable turnover ratio. Its formula is basic and it's very simple. So 360 divided by average account period is equal to 360 divided by 59. 360 divided by 59, that will be 6.10 estimated. 6.10 times. So accounts receivable turnover ratio, it will have the certain amount given by the accounts average account period. It will be given throughout the entire math. So that will be 360 divided by 59 is equal to 6.10 times. So at the end we have at least one more. So the last, total asset turnover. What is total asset turnover? Let's see. Total asset turnover, sales divided by total assets. Let's hunk up the number. 307, 4,000. So total asset turnover is sales minus total asset. All the amounts that we sell and the total amount of asset or the money we have. So that will be 3,074,000 and the total asset we have 3.7,097,000 is equal to 0.85. That will be 0.85% is the total asset turnover ratio. So these are the two kinds of ratios. We got the liquid ratio and the asset management ratio. If you have any kinds of question regarding this class, please let us know down in the comment box below and be with Gurukul. Thank you so much.